Welcome to the FX Street webinar. My name is Ian Coleman. I'm one of the bloggers on the site. I'm also a partner in a trader management company, which is a live trading room. I've been involved in the FX market for about 22 years now, broker, analyst, and a trader. Okay, today we're going to cover, we're due to cover euro dollar, sterling dollar, and euro sterling. But what we're also going to look at, which I think is quite important, is price action. Price action within the pairs. Okay, I've actually added two indicators to my charts this week. I've written some very basic programs on the IT charts, and they just alert me. Obviously, pin bars or dojis, if you want to call them dojis, or spikes, chopsticks, etc., are quite easily recognisable, and we all know what they are. They show us price rejection or price refusal, not necessarily a trend change, but obviously very relevant in the market, and the higher the time frame, I'd say the more relevant they are. I used to do some analysis for FX Street called time frame breakdowns when we first got together about 3 years ago, and that would basically break down a weekly chart into a daily chart, then a 4-hourly chart, then an hourly chart, and then on to sort of 15 minutes, and maybe even sometimes 5 minutes, okay, to sort of produce decent entry levels. So these two indicators, I've got the RSI here, okay, that's got the 50 line across it. I use the 50 line for bullish and bearish sentiment, okay. I've got directional movement indicator. Basically what you're looking for a DMI, it's got quite a few components in it, but basically red, similar to the MACD, red bars, histogram on the downside shows you that the bias is to the downside. Obviously green across the top biases to the upside. The reason that I use it is it's very good at keeping you in a trend and not whipping you out when you get spiking or quick trend changes in one direction or the other. Third one is obviously a MACD with the normal settings, 12, 26, and 9. And then these two I've just put down the bottom in the last couple of days. One of them will alert me to a bearish engulfing candle. Okay, the next one to a bullish engulfing candle. And they're things that I'm looking for as I break down the time frames. Okay, I'm looking for fib levels at I'm looking for support and resistance. Market moves off support and resistance. Okay, I'm looking to find my fib levels. I'm looking to my 50 RSI. Okay, I'm looking to my moving averages. I'm looking to my cloud cover. Okay, and when I get these corrections or reversals, I'm looking for them to be confirmed by spiking candles, pin bars, dojis, etc. I'm looking for engulfing greens, engulfing reds, and basically these indicators that I've developed at the bottom basically help me flick through all the different currency pairs that I'm looking at, because I am breaking them down from time frame, and you know, every 15 minutes I'm having to look, is it getting close to a resistance level, and then I break it down. This is the side that I want to be on. If I get a doji here or a reversal signal here or an engulfing green, even if it's all the way down into 5 minutes, can I scalp it? Is it worth a scalp? Is the risk reward there? So they're all trade setups, and some of them have got very, very good risk reward. Some of them are 1-to-1. I don't take any trade unless I think I can get at least 1-to-1 risk reward out of it. Sometimes I don't trade very often because my setups aren't particularly good. And then other days I can trade quite a bit because I'll trade off shorter time frames with a longer time frame view. Where I like the reversals, or where I like my chart patterns to emerge, is either obviously at the top of a trend or at the bottom of a trend. I don't particularly like patterns inside. Okay, so this is a weekly chart, so I mean this is a bit severe, but you know, you're looking for reversal patterns at the top of a trend, reversal patterns at the bottom of a trend. This was obviously a decent pattern, but it was a decent pattern in shorter time frames, not necessarily on the weekly. Okay, so we then break it down. Okay, what does our weekly chart tell us? Well, we obviously had this very decent move down, which we actually counted out in 5 waves. I expected it to stop around this level. That didn't happen. It pushed through. Gave a little indication that it might stop. We got a half decent candle here, but it didn't happen, and she kept going. What you should notice is this candle formation off the top. Okay, it's virtually equal, but the second candle has actually closed slightly below. So you've got pin bars, okay, with a virtually equal top. On a weekly chart, you can give them a little bit of leeway. When you get down to sort of daily charts, they want to be within sort of, I'll say maximum sort of 4, 5, 6 probably on euro dollar. Okay, so you're then looking for the second candle to close below. I mean, that's a big history lesson. But these chart formations, they form in all time frames. What I will say to you though is just be careful if you don't forget about 1 minute. I don't trade off a 1 minute chart because I'll be in and out of the trade so often. But they obviously chart patterns that emerge in all different time frames all the way down, and they mean exactly the same thing. What I will say is that the larger the time frame, the more relevant for me that chart formation becomes. To put it this way, if I had a 4-hour engulfing green candle and then I had a small doji on a 5-minute chart with a red after it, would I sell it? No, because I'm still wary of that 4-hour engulfing that I've seen before. It's warning me that we might be getting a trend change. Okay, so let's get to the charts. Euro dollar, obviously large move down. Okay, around 38.2%, but I think that's pretty irrelevant. What I do know is I've got 5 waves down. I'm looking for 3 waves up, so I'm actually looking for this to go down, up, correct, and then up again. And this second correction, I'm looking to reach around this level. This is price action. Okay, here we've got a lot of consolidation. Notice our moving average here just holds the level for probably 2-3 months, okay, until she finally breaks. Here, when we talk about engulfing red candles, okay, perfect engulfing red, that starts this move lower, or continuation of this move lower. Okay, they're not necessarily reversal patterns, they're also continuation patterns as well. To get onto the daily chart. Before we go any further, Mapos, you wanted to ask a question at the start. If you want to type it in, I'll do my best to answer it for you. So here we've got obviously this 5 waves down. As far as I'm concerned, if any of you follow Elliott wave, okay, your A wave is in 5 waves, and I can see 5 waves here. What's short on the fibs? So see, I'm not just trying to show you where I think they're going to go at the moment. I'm also trying to teach you, as we do in trader management, what to look for and how to trade. Okay, because I can tell you, I can do the forecast every day and tell you where I think they're going to go, but unless you know how to enter and exit a trade, it's pretty irrelevant, really, because the views change within the day. I mean, that's why analysis is quite hard. I'm not just saying that because I do that. Yes, I did. And if you use these charts, if you want to send me an email, I'll send you the code, if you like. It's tradermanagement.com. Yeah, if I tell you where I think they're going to go, then I get, so well, Eurodollar's bullish this morning, blah blah blah. Then I get, send the report out at 7 o'clock, and at 9 o'clock you get a big reversal candle. Then, that view has changed. And I only do one report a day. You have to. I'll probably update the blog a bit more. But you've got to be aware of what's going on around you. Okay, so we've got this up. 1, 2, 3, 4, 5. This here, the magic EMA. Okay, held the pair. As far as I'm concerned, that's wave A. So we've got 5 down for 1. This is A. This is B, and then C should take us back up. Again, when you're looking at a price action here, you've got a decent red off the top that engulfs the previous red. Okay, that pushes the pair lower. This large green candle cannot be ignored. Okay, takes out a new high. This is price action, then into the cloud. Okay, you then get the moving average crossovers here that hold as support, spikes through to the bottom. You get an engulfing green, which our indicator here tells us. Okay. Also, you should note the amount of green candles. Okay, the amount of engulfing green candles against the amount of engulfing red candles. Okay, 5 green candles there. And let's call it to that period. Okay, 5 green candles engulfing, 2 engulfing reds. And the engulfing reds, if you look at them, are pretty small. Okay, so we move up, another engulfing green. Again, takes it off the EMA. That was virtually an engulfing, but it wasn't. It didn't quite make the low, but it still pushes all the way up. And then we get this small engulfing red off the top, which I wouldn't have counted actually, because I believe that's a Sunday. Yeah, that's a Sunday. Okay, but when it hit this EMA, I'm then looking for a downturn. I'm looking for a downturn in three waves, and I'm looking for my fib levels again. Okay, I know this was impulsive. I know we look at that weekly chart and go, Jesus, what a candle. But the B wave, in Elliott wave, A, B, C, normally stops between 38.2 and 50%. Okay, 50%. What did we form? We formed a fantastic doji. Okay, on Tuesday. Okay, this isn't an engulfing candle because that is Sunday. Okay, forget about Sunday. I do leave the weekend data on my charts because I do want to have a look at the opens. Okay, then down to 4 hours. This is the this is the chart that's been sent on the morning reports. Okay, up in 5. Okay, what have we got here? Okay, this is bearish, without a shadow of a doubt. Okay, came off the top. That was our EMA, pushed through, wiped out the cloud pretty quick. Nice impulsive. I was actually on holiday for this period here, which I'm quite grateful at the time to start holiday because that's horrible trading. I didn't do it on purpose. But what have we got here? This along here tells me that the bears are trying to take, the bulls are trying to take control of this trend again, because they are making some progress to the upside when they're taking control. But off 38.2, again, price action. You've got a decent doji down this level. You've got a decent green candle, okay? But when you're getting back up to this level, and you see all these spikes, okay, they're warning you that the market does not want to go any higher, okay? And at that point, you're either tightening up your profit, your stops, or you're taking profit and looking for another signal. Now, this is the one that did it to me this week. We come down, okay, this was very aggressive, extremely aggressive candle. You come down to 50%. Okay, and what happens here? We get a huge engulfing green candle off 126.06. Okay, doesn't really get any better than that. What happens a lot as well with these engulfing candles, notice how it goes up and just clips my moving average again, okay, and rejects it. It then comes down to give a long entry. It then goes up, spikes again through that moving average, okay, comes down, and the rest is history. Okay, where do I expect the pair to go from here? I mean, this 4-hour candle shows indecision. Okay, it's gone to the downside, also gone to the upside. If we break it down into 1 hour, again, that's a perfect warning sign. This is your entry. Okay, what you want to look for on these engulfing candles, especially the larger time frame engulfing candles, when you break them down into an hourly chart, if it is rejecting resistance, and these are my resistance levels, okay, these are my EMA, I've got my EMA and I've got my cloud, so it rejects. But I know that is strongly bullish, okay, so I'm still looking for longs. It then comes down, okay, and around here, because obviously I'm asleep at this point, around here, I want to be looking for long entries. Now, I'm then breaking it down, not just into an hourly chart, but into a 15-minute and a 5-minute chart, because I want to get long here. Okay, that was 7 o'clock in the morning yesterday. Okay, what's this candle here? This was the one that did it for me yesterday. Got a spiking candle. It's engulfing. Okay, it's engulfing the green before it with the 2 spikes. Very nearly got taken out on the move down. But again, a decent push up, and the rest is history. Where do I think it's going? I think it's going up, but I am wary of the rate of change. Okay, this to me is not impulsive enough, really. I mean, what I've looked for is obviously after this retracement down, I'd look for this to be more of an impulsive move up. Again, all my indicators, RSI is above 50, DMI is positive. Do I have divergence? No. Made a higher high, made a higher high. Okay. What's my last 2 candles? Well, I've got 2 bullish engulfing candles there and there, but obviously that doji is a bit of it's going to sink it back down. But when it sinks it back down, I'm then looking towards this level, okay, so this moving average again for its spikes and price rejections. And again, I'm breaking it down into time frame. 15 minutes doesn't do anything for me. I don't engulf on a green. Not looking particularly hot around there. 5 minutes. There she is. Okay. Bang, 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 bang. These candles are telling me that I want to be getting long in this pair. I actually took a long position just after this with the stop below here. My profit target's up around here. Okay, that's a scalp trade, by the way. I'm not in it for a long play, because I don't. This area here, this barrier here, is what I'm worried about. So I'm constantly looking to the big picture. Okay, I'm looking to this as well is very relevant. I've got a confluence of moving averages here, and I've got a pivot. Okay, so 127.86, I'm expecting some rejection. Remember, if this is wave C, then it's going to be in 5 waves again. Okay, and the hardest 2 waves to trade in Elliott wave are waves 1 and 2, because they're so choppy. They don't stick to the rules most of the time. They don't stick to 161.8%, 161.8%, 38.2, 261.8. The first wave's always a mess. Look at this one, won't too bad, but 123. Okay, so 50%. Then what do we get? Breaking it down for you again. And what do we get? We get an engulfing. We get doji first, then we get an engulfing green, which tells us off the back here. Okay, move up, engulfing red. That's not red, is it? It's an overnight, nothing candle. Okay, and another engulfing green, and another engulfing green. Okay. Any questions? What? And in the trader, I expect it to, but I want to see a big. Elliott Wave tells me it should. Elliott Wave tells me it should bottom out between 38.2 and 50. But it can, if it wants to, go all the way down to here as long as it doesn't breach the low, which would be pretty frightening. But I don't think it's going to. Fundamentally, okay, there's more bad news out of the States now than there is out of Europe. I know when things get bad, but things like well, you name it, it's not good. What did we have out yesterday? Durable goods. I mean, that was bound to be a bad figure, because if you can't buy a house, you can't buy a fridge to put in it. I mean, they're just, you know, the forecasts, I think, have just been a bit too bullish lately. But what also happened, some of the guys at FX Street said, "Oh, will you write something about non-farm payroll?" I will do, but I'll write something about non-farm payroll, but I'll write something about it with a chart attached to it, because I'm more about the bias of the chart than I am about the actual result. Because you've got to remember, going back to, I'm going a history lesson here, but December 09 or wherever it was, when the euro changed its direction. Until that point, with all the good news, we were buying euros and selling dollars. Then we had good news out of the States, and we suddenly decided we're going to buy dollars and sell euros. Now that was a chart pattern. That wasn't a change in the fundamental outlook, because we didn't have the Greece situation until much later than that. So that was a turnaround, and that was a chart pattern, and that's why I stick to chart patterns more than ever. Now here, we're obviously getting a lot of bad news in this period. Okay, stocks have really started coming off quite heavily, but the bad news is more out of the States than it is out of anywhere else. German figures are coming in great. So what I think the market is doing now, I think they're going to start dumping the dollar. I think they're going to start buying the euro and sterling, and that's just what the charts are telling me, and that's what I trade. I just trade the charts. I just trade what I see, not what I want to see. And at the moment, I see an engulfing green off a 50, off a decent chart formation. Okay, this could extend lower. You could look at if it wanted to make a full ABC, it could trade all the way down to this sort of level, 123.20. I want to really get above here, and that's what I mentioned as well in the report this morning. This is my level of rejection. It's 127.86. If I can bust through there, then I'm probably going to correct off the cloud, come lower, and then take off again. And if I get up towards that level and reject and come lower, I'm likely to form a head and shoulders, a reverse head and shoulders formation, which will take me up. But I'm trading what I see, and at the moment I see euro dollar bullish short term. Hopefully it's going to stay bullish. Any other questions about euro dollar or about what I've been talking about? And then we'll flip onto cable. No? Okay. I'm going to try and cover some other pairs, okay? I know that there's a lot to talk about. Only an hour to talk about it in. I like gold for a short soon, by the way, which everybody might think is pretty. 27.30. Well, 127.30. I can't see that myself. No, 127.85. I think is key level. My moving averages. These are my golden numbers. I got them under login. I'm only joking. But when they merge, okay, I know I've got very, very solid resistance, and they're merging at 127.85. I've also got a pivot point there. If I can break above there, then I am securely bullish as far as I'm concerned. If it rejects there, comes lower, then I'm looking at this level to hold. Do I have a reversal candle at the moment? Not really. She's also got another 33 minutes to go yet. Yeah, 127.85 would be the key level for me. And I know everybody wants to trade off short time frames. I know everybody wants to get into 5-minute trades and put 10 on a day and bank loads of pips and what have you. Longer time frames are less noisy. Okay, I know you have to have wider stops, but your targets are bigger. So it all works out in the end. You know, if you're normally trading £5 a point, trade £1 a point, £2 a point. And also, if you get a signal, a decent signal on a longer time frame, you don't have to take it as soon as that candle here. Yeah, I mean, it's going to, as we know, this is a price zone, okay, it's a swing low. The swing lows become target levels, okay. So yeah, we have got resistance here, but to me, I don't think that's going to hold up. This is the relevant one. I know that the prices move to my moving averages, and that is very relevant for me. Let's switch over. I forgot what I was talking about. Cable. Okay. I did some educational PowerPoints. Did a webinar, seminar for Saxo Bank, talking about price action and stuff like that. And trying to get rid of all this the other day. So there's all these guys on here. Okay. Here we've virtually got a pretty perfect high-low break. Basically makes the same high. I think you'll probably see it on the daily chart a bit better. But there's within sort of 4 or 5 ticks of each other, which is probably about as best as you're going to get. Okay, and it's not quite an engulfing candle because this second candle is about 4 or 5 ticks lower than the green. Okay, but it does take out the green candle. And you know what's happened with move lower. Now, I've done all this before, sorry. Now what do we have? Coming in. Again, I've got my EMA. Okay, I've just clicked my EMA and I've clicked the bottom of the cloud. That's what I'm looking for. Okay, I'm looking for confluence. I'm looking for things, not just a cloud cover or a moving average or the 50 on the RSI. I want them all to line up. I want them all to line up, and then they say to me, "There's really a good chance that you're going to bounce off that level because you've got all these different supports or resistance levels." So what I've got here, MACD is bullish. This is bullish, telling me that the trend is still to the upside. Okay, I got engulfing green a while ago, but it wasn't particularly, it's in the middle of the trend. But here, I've got 50 RSI, or above 50. Okay, I've spiked down. I click 153.55, which is my moving average and my cloud. Daily chart. My moving averages are the same, okay, as I break it through time frames. So what I see on a weekly, I see on a daily, just in a different colour. What I see on a daily, I see on a 4-hourly, just in a different colour. It doesn't matter which time frame I break down from, I can still see what I should be looking at on a weekly chart. I'm not having to flick all the way through or having 6 charts up at the same time. Okay, so here I get warned. This is my warning line. Okay, it's given me decent bearish. Okay, obviously off the top, then moving averages held the pair once, twice, three times, and then pushed it lower. I was on holiday then. Then we get the engulfing red. It takes us down. In fact, was that an overnight? Yeah, that doesn't count. That candle. Okay. Takes us down to our moving average, and we stop here and move up. So when we get to that level, and I know that I've got my weekly cloud, I know I've got my daily support. Hasn't really gone far enough for me though. You know, 38, it didn't even reach 38.2%. Okay, between 23.6 and 38.2. Normally, the stronger they move up, the quicker they fall. And cable recovered better out of all of them. So, I'm not really too ambitious or looking for longs too much yet. This is a price zone. Okay, all these X's that we wrote about in the report again this morning, these previous support levels. Okay, we've gone up. What have we got? We've got the R3, we've got the EMA. Okay, we've got the previous price zone, the line across here, which is at 155.70. I know that there's going to be a very bullish candle up this morning. I know that there's a good chance that we're going to get some rejection. And I'm not a million miles away from the cloud. So, again, Doji, talking about price action, Doji, a decent candle, didn't engulf, but it was a double low high close. Okay, double low means that they're both closed at the same level. Okay, the high close basically means it closes higher than the high of this candle. Okay, so that is another bullish formation. This is price action. Okay, all these indicators, apart from these, okay, these are all lagging indicators. Moving averages are normally lagging. What all my indicators are, or virtually all my indicators, I believe, they are forward projecting indicators. Okay, but the thing about analysis is we're all trying to tell them what's going to happen in the future, not what's happened in the past. Okay, the RSI at 50 shows me support and resistance. These moving averages show me support and resistance. I'm not. Have you ever heard me talk about moving average crossovers the whole time I've been doing the seminar? Never, because if I wait to there until these two cross over, I'm not until, the trend is virtually finished by there. If I wait for all three of them to cross over, I could be waiting for a year. Obviously when they spread out, when the trend is to the upside, that's showing a strong trend. I'll take note of that. But I'm not worried about crossovers. What I'm worried about is support and resistance. I'm looking for support and resistance. And I'm looking for price action, and I'm looking for chart formation to get me in and out of trade. So anyway, we've had this move up, okay, breaking it down again. Now here, what do we have off the top this morning? We've got a great 1 hour engulfing candle, which has been signaled. Hold on 1 second. Sorry about that, guys. My son has just come in to listen. The school holidays, mother's out working, and he was supposed to be on a sports camp, but he's not feeling very well, so he's at home. So he's come in, but he's promised to be quiet. Okay, so we've got this engulfing red candle. Okay, moves down. What does it move down to? Moves down to the EMA, which is obviously the support level. Moving up, clips the next EMA, and then looks to be coming lower. Fibs, okay, 100% pullback, impulsive move up towards 161.8. I didn't take a short trade off here. You could have scalped it down towards the EMA. And the reason why I'm not looking to get involved in this pair at the moment, so sometimes I talk to people and they say, oh, you're an FX analyst, what currency pair do you trade, or what currency pair do you trade? You get loads of people that just say, oh, I trade cable, I trade euro dollar. I don't. I look at 20 different currencies or currency pairs or indices, so I can give myself the best opportunities. I think that's what it's all about. And here at the moment, for me, because of the view that I've got on euro sterling, I don't think that the cable's the best trade to be in. And the reason I don't think the cable's the best trade to be in is because I don't think this retracement has been enough yet. I might be wrong. I might be incorrect. It just doesn't look low enough for me yet. So short-term bias is definitely still to the upside. But I'd like to see a reversal pattern on short time frames to take me up to this sort of level. If we get up to this sort of level, then 261.8%. I've got 5 waves up. I'm then looking to 3 waves down to get long again. Okay, but at the moment, I don't really like the look of this because I think she should get down to this sort of level at least first before she moves up. That brings me on to euro sterling. Okay, big picture. Does anybody see anything there? Obviously, I've got an X on the chart. Is what a correction. So cable, sterling dollar. Yeah, I think it's wave B again. Sorry, did I not say that? I've got 5 waves down. I've been up in 5 waves to form A. I'm looking for 3 waves down, but that wave down should make 38.2%. I might be wrong. I think he's got a little bit further to go yet. And the reason why I think he's got a little bit further to go is because I've got a view on euro sterling. And I think euro sterling goes higher. And obviously if euro sterling goes higher, then sterling should either go lower or not go higher as quick as euro, obviously. Now here, what do we have? I think we have a flag. Or if it's not a flag, it's a pennant or a wedge formation. But for me, long term, impulsive move up, choppy move sidewards, down to 50%. Okay, 1, 2, and 3 waves. All chart patterns are relevant on all different time frames, as far as I'm concerned, anyway. Okay, so this is what I'm looking at. Okay, I've got a decent spiking candle with a green body as well, which makes it slightly more relevant. Okay, at the 50% retracement mark. Okay, so then it went up, clipped my moving average, my resistance level, and then moved down again. Daily candle, the daily candles. Okay, decent move up off the bottom where we formed that. We formed that doji. This move up was impulsive. Okay, it was impulsive all the way up to this point when I made exactly a double high. It wasn't a low close. Okay, could have been slightly better, but it was at the top of the candle. Sorry, the top of the cloud formation, and it's pushed lower. That's impulsive. This is corrective. Okay, you can see by the angle. Let's put an angle on it. Object, line by angle. Okay, that's 46. That's 27. Okay, so that's impulsive. That's corrective. So I'm looking all the time while this is moving lower. Okay, I'm looking for opportunities to get long with this pair, because I think I've got my doji, I've got my flag as far as I'm concerned in the weekly. Okay, I'm not above 50 yet on the RSI. DMI is showing that I'm still to the downside. But look at these. They're big histograms, big bars. These aren't. That shows that this move down is pretty weak. Okay. I had a bearish candle here. Look at the amount of bullish candles I've had as well, even in this move down. Okay. So I'm looking for longs. Really trying to get through that. 9-11 has been quite relevant this morning. Okay. I am long of euro sterling. I bought 1 unit at 67. And I will look to add to it if it breaks. I've now got stop to entry. But what I do have here, okay, I've already banked about 60 points. Got out at this level to try and get in at this level. So banked, I think it was 56 points around here. And then I've gone along again here. Okay, we've got an engulfing green. Okay, I know we've got a decent move down, and you could have played this move down. This is price action. Okay, off the top, off the cloud, engulfing green candle. You should see here. Okay, took the price lower. Another engulfing green candle, took the price lower. Here, we've got a doji at the cloud, at the 62 EMA, took the price lower. I didn't take that because I'm not a scalper, and I don't like trading against my view. My view is obviously bullish. Now here, this was what worried me this morning. I've got a very large engulfing 4-hour candle, which warned that she's going to break to the downside. But I'm still looking for long positions, okay? I'm still looking long positions, even though, you know, my first bullish candle was a while ago. I got 1, 2, I got 3 on the way up. All right, I've had 1 on the way down. But then I'm looking down to time frames. What can I see? 1, 2, 3. Look at this here. Bang, bang, bang. I know it looks a mess. Let's get rid of that. 1, 2. Huge red, green, top line. Okay, and here spikes through, holds above, spikes through, holds above, and then takes off again. Okay, and we've got this move up to the top, which was our price target. Our original price target was actually 22, so it did exceed it, and it did move slightly higher. If you put a fib on here, okay, bit messy. The 261.8%. was 82.35. So I've got a decent 5 up, sorry. I don't breach the top of wave 1, so as far as Elliott wave is concerned, the bias is to the upside. Bang, bang, this I didn't like this morning, okay? But what I was looking for, I'm still looking, get rid of this fib. I then put a fib on again, okay? I'm still looking for bullish signals, okay? Very bearish on the way down, stops around 61.8%, no signals to go long there, okay. And then obviously this morning I get this bearish engulfing 1-hour candle, but I also get this candle that forms at a pivot, it forms at 68.6. I then break it down into my shorter time frames, okay. In 15 minutes. That's what I'm looking for, and that is where I executed my long trade. Okay, at the end or at the close of that 15-minute candle. Okay, pushed up quickly. I knew there was going to be resistance around here because it is around here. I've got my EMA, I've got my next EMA, I've got cloud. Okay, it then pushes lower down towards 61.8. When I get up to this level, I've got the choice of 2 things. If my entry level is below the 61.8%, I'll normally move my stop loss to entry. If my entry level is above 61.8%, then I'll normally leave my stop below the low. But I'm looking to get my risk off the table as soon as possible. I did only trade in 1 unit. If I traded in 2 units, I would have taken 1 off around here, and then moved the stop loss, left the stop loss below the low. But I didn't. I only had 1 unit, so I moved my stop loss to 81.67, which was my entry level, and I'm still long. This isn't looking particularly great because if we're going back to the big picture, okay, or the bigger picture. This should be 1, this should be 2, and this should be a rally in 3. okay, but I'm in it. I've got 15 pips to play with. I've come down, I've spiked once down to it, okay. Again, this is very relevant, this level between 80 and 90, okay. I need to get a close inside this 80-90 level to keep the bias to the upside. And what I really need to do, I need to take out here, I need to take out 89. Okay, any questions? Because I've got to wrap this up. Yeah, if this trade works out, I'll be looking to take it a long way, at least up to this sort of level to start with. Any questions? We've got to wrap it up in a sec because we've got somebody else coming on board. Any questions? Anybody? Just going to quickly show you this before I know I shouldn't. I'm not going to explain my welcome. Big picture. This is gold. 1, 2, 3, 4, 5. Wave 1. ABC is 124. Sorry, 1244. Okay. I'm looking for reversal patterns in gold. Okay. Perfect ABC. If she turns here, I haven't got any reversal patterns yet. Okay. None whatsoever. Notice what happened here. Okay. It refused the bottom of the cloud. It refused all the EMAs and it moved higher. I'm looking for reversal patterns. Yeah, that's correct. I'm actually in discussions with Naomi at FX Street, and we're going to, well, hopefully, if it's all agreed, we're going to be doing some different courses across Europe, basically, or day courses. If you send me an email, Chand, on that email address that Mappos has just put on there, I'll put you on my list, and as soon as I get more information about different courses and what have you, and where they're going to be situated, I'll send you I'll send you an update, an email. And if anybody's got any inquiries, you can use, that's my work address. You can use that to post them to me. But I would prefer if you contact me via the blog. Okay. Okay, guys, that's it. Enjoy yourselves, and see you next week. Okay, bye for now.